Hi, my name is Khleif, and I'm the host of the Lifetime Cash Flow Through Real Estate Investing podcast. And every week I interview multifamily rock stars, and we talk about how they've built incredible wealth for themselves and their families through multifamily properties. So hit the like and subscribe buttons to get notified every Monday when a new episode comes out. Let's get to it. Welcome to another edition of Lifetime Cash Flow Through Real Estate Investing. I'm Khleif, and I'm thrilled you're here. And you do not want to miss today's episode because you're going to get an incredible free resource that is worth its weight in gold. So don't hang up, don't leave, be here. So I've got one of the people on my CREE Capital team, my acquisitions team, Craig Drummond, and he's also a warrior in the coaching program, but he has created this incredible software program that you're going to get for freaking free. So like I said, don't leave, but let's bring him on. Welcome to the show, brother.
All right. Thanks, Rod. I want to thank you for having me on your podcast. I grew up listening to your podcast. I joined your Warrior program, and I'm thrilled to be able to work with you on a daily basis. And now it's like a dream come true to be actually on the podcast that I used to listen to.
Oh, that's kind of you to say that, brother. Well, listen, I know that you had a huge career in IT before you came on my team. So why don't you give us just a quick background on you, and then we'll get right into this.
Yeah, sure. So I spent 22 years in the tech industry, specifically at Intel. I started as an analyst, performed a lot of different analyst roles for the better part of a decade, and then I got moved into more of a program manager role for business intelligence, where I managed a team of 22 application developers. And we used to build BI applications for our sales and marketing team in the Americas geography. Awesome experience. I love data. I love being able to build tools to bring data, like meaningful data, to our sales team so they can make impactful decisions on how to service their customers. And then I've always had a hankering for real estate, right? So I started investing like typical path, started doing the multifamily, started buying duplexes, started investing out of state, and then figured I needed to scale. And that's when I had actually known about your program before that, but when I actually made the decision that I wanted to scale, that's when I really started getting serious about the Warrior program. And I joined that just about 2 years ago now.
Was it at a boot camp, or how did we connect?
Yeah, it was one of the pandemic boot camps that was online.
Virtual. Okay.
It was just $99, and I'm like, there's no way.
Right.
It's so reasonable. So I had to commit my weekend and learn about it, and it was fantastic.
Oh, thank you. Thank you. So how did you get into actually underwriting multifamily? Because you're our top underwriter on my CREE Capital team. I mean, it's extraordinary how fast you can underwrite a deal, and what an incredible job you do. So how did that all get started? How did you get started doing that?
Great question. So as I mentioned, a lot of the roles I've had in the past were all related to data. Right. So as an analyst and then as a program manager, and I absolutely love data. I love the ability to be able to take lots of disparate data, mash it together, and be able to tell a story with that data that's meaningful to somebody else. So when I joined the Warrior program, I figured that you talk about superpowers in the program. And I figured, well, that's where I want to focus my energy. I want to be able to partner up with people that could do like the broker relations piece of it and capital raising, but I really want to focus my energy on the analysis. And so that's what I did, and underwrote a whole bunch of deals. I used pretty much every underwriting software I could get my hands on. And I, naturally started reverse engineering those and started finding things that I didn't really care for. And I started building my own underwriting tool, and I've probably put over 2,000 hours into developing my tool. And that's what I use now for your team.
Yeah, no, it's what the Warriors use. It's how they send deals to us to review. And what is it called again?
The Multifamily Analyzer, or MFA.
MFA, Multifamily Analyzer. Guys, and you're going to get it for free today, okay? And this isn't hyperbole. And when I tell you it's better than just about anything else out there, I do not say that lightly. I say it absolutely with complete confidence. Yes, you can pay $3,000 a month for softwares that are a little bigger than this, but I'm telling you, it is extraordinary what this software does. And so let me ask you this. You're underwriting now, and Well, in fact, let me just say right now, if you are interested in getting this software, we're going to talk about the features in case you can't stay on the call. Text MFA for Multifamily Analyzer to 72345, and we'll send you the link to get the software for free. But we're going to talk about what all it has here in just a minute. But before we do, I want to talk about some of the challenges that you're encountering right now, and we're encountering as a team, but you can speak to that in underwriting, in trying to get a deal to work. I mean, we're working on a big deal right now we're challenged with. So let's talk about that a little.
In short, we're trying not to catch a falling knife, right?
Yeah.
There's a lot of FUD, fear, uncertainty, and doubt in the market. What's happening with interest rates, what's happening with our economy, what's going on with the rents right now, because we're starting to see that taper off. So it's really just trying to ingest all that information and to make very conservative, but very decisive action towards some of the properties we analyze. So I'd say that the biggest struggles I think we have right now are what's going on with cap rates. Do we expect the cap rates to continue to kind of inch up? Or how can we forecast our cap rate out in time? Because that's very important for our exit strategy. Right. Also, rents. What is going on with the rents? We're seeing a lot of markets where rents have tapered, and then we're also starting to see some year-on-year decline.
Yeah, we're seeing decline in one of the markets we're in right now in Nashville. But back to cap rates for a second, and guys, why that's important? Because some of the peeps may not understand what you meant by that. When you're doing a pro forma on an asset, you're trying to calculate, what the returns will be if somebody invests money in your deal, and you've got to determine what you're either going to be able to sell it for in 5 years. Typically, it's a 5-year horizon, or what you'll be able to refinance it for. And because interest rates have gone up, cap rates tend to trend with interest rates. You've got to be able to project, and it's like, it is a crystal ball component to this, but you've got to be able to try to project where we'll be 5 years from now. And you can't be aggressive with this. You have to be conservative. So anyway, you were talking about rents. Please continue if you had more to.
Just to elaborate on the cap rate conversation is underwriting models are highly sensitive to cap rates, right?
Right.
So a tiny change in a cap rate has a tremendous impact on the underwriting. So this is why we spend a lot of time trying to understand not only the MSA cap rate, the market cap rate, but also the sub-market and for the asset class that we're analyzing. We spend a lot of time trying to understand
MSA is the Metropolitan Statistical Area, guys, and that's like a big area like Phoenix or Tampa, or it's just a big. Anyway, keep going. I just want to deconstruct some of the terms you're using if someone doesn't know what they are.
Yeah. And then one of the other things that has a tremendous impact on your underwriting is your gross potential rent. So what is the maximum amount of rent that we can get for this property, assuming no vacancy? That's the very top line revenue number. And it's the largest number in your pro forma, in your underwriting. And so we spend a lot of time trying to get that right. So we're analyzing a lot of competition, looking at all the competitors in that area, looking at the unit mix for those competitors, the size of the asset, the amenities, so that we can really dial in on our rent strategy for the property. And a lot of our properties that we analyze are value add. So we're trying to figure out, what is the rent we can achieve with the units that are in place? But also after we, improve those units, what is the rent that we could realistically achieve after that?
And it requires some real thought process because, rents aren't expected to increase like they have been. Although I did read an article today, you probably saw it as well, that they're projecting 2.83% increase for the next couple of years. We're projecting, in our pro forma, we're doing 0 for the next year, correct? Mm-hmm. Yeah. So we're super conservative. Now I know your software. First of all, I know it's an Excel add-in, right? It installs directly into Excel, and you get a ton of free tools with it. Can you speak to what comes with it?
So the Excel add-in is there. It's optional. You can add it into Excel. It installs directly from the Microsoft Store. I had to go through a huge process to get it certified by Microsoft. And what that enables you to do is you could download all of my tools directly into Excel without ever having to go to my website. So you get the latest version right in Excel. So with registering on my site, you'll get a free underwriting tool. It's essentially the one-page underwriting model that I've created that we use on Rod's team. And then you also get an underwriting checklist. So I have a very detailed checklist, step by step, with key decision points at each step, and then very descriptive or very good detailed descriptions on what you're expected to do in each stage. And then also I created a market analysis tool. So a lot of the key indicators that we look at when evaluating a market or a submarket, as well as hyperlinks that allow you to go get the data, right? So you just fill it in and it shows you red, yellow, green for each of the indicators, so you can kind of paint a picture and determine whether it's an area you want to invest in. And then part of the Addin also, so I've been in Rod's program for about 2 years. I've accumulated a tremendous amount of hyperlinks for market research. And I finally went through, I looked at every single hyperlink I have, and I've organized those into very meaningful buckets like demographic hyperlinks or informational or crime statistics. And then I've organized all those in the Excel add-in that you can add into Excel. And you just click on the category and it gives you all the links and descriptions, and you could search and do all that.
And I know it's really intuitive. You've made it, really. And in fact, when you first did it, it was so advanced that even really great underwriters in the Warrior community were struggling with it a little bit. I said, man, you got to do an easier version. And so we came up with this. You came up with this version, which is just extraordinary. Now, I know you can pay a little more. You can pay, what is it, $249 to get the advanced version if you when you're ready to get there. But you don't need it to start. Trust me. You can do you can do such an incredible job with this free version. It's ridiculous, and it's one-page underwriting. You've got I know you've got training videos for every piece of this to help walk someone through it. Now, understand something. There's going to be a learning curve, guys. Okay, it's going to take you, some practice runs. You're not going to be an expert the minute you watch his videos and get started. You're going to have to play with it and immerse yourself in it, and that's how you become great at underwriting. And I get people that come to my boot camp, and I tell them, listen, you're not going to be an expert in evaluating a deal when you leave here. You're going to be an expert once you've evaluated 100 deals. Okay, and it's the same way with this software. But this tool is so extraordinary. It's free, which is insane, and it's got all these incredible add-ons like that checklist he just described, and a list of the websites, these hyperlink websites, which is fantastic. And there's lots of tips that he's got in there to help you get through different pieces of this. And so I was like, Craig, I got to get you on the show and have you get this out there. And so I'm really glad we did this. And so, you talked about, let's talk about some of the other return metrics that you explore and that we look at when we're looking at a deal. Maybe you can outline that a little bit.
Oh, for sure. Yeah. So we touched on cap rate already. So if the way I've organized my underwriting model, it's top to bottom. You work on one section at a time. And that's kind of how I think of our return structure, right? So the cap rate is kind of the top. That's kind of basically your return before debt service. So it allows you to evaluate deal versus deal, excluding debt, so that you can see apples to apples comparison. And then the other common metrics we use, cash on cash return. So I see this as more of an operational indicator. How much cash is the property producing against the capital invested in it, right? So it's really a good measure of the cash flow of the property. And if you look at that by year, you could kind of tell how it's going to perform. And then if you move on down from the stack, you have an average annual return. So this is looking at like what you've invested in the deal, all the returns from cash flow, your return on exit, and then calculates an average return based on the hold period. So it's a very simple way to say, well, I'm going to average 15% a year on a deal, right? Just average. And then the other one we look at a lot that most investors do is IRR, internal rate of return. This is similar to the average annual return, except that it accounts for the time value of money. So it discounts all forward cash flows to today's dollar. Don't ask me how to do that calculation manually, but Excel has a nice function that does it for us. And then similar to that is I also look at equity multiple. I think this it's a basic ROI, but I really like this one because it says if your equity multiple is 2, that means you're going to double your money. Right. So it's a 200% return.
If you're a limited partner or LP investor, and you're thinking about investing passively, of course, we've raised, I don't know, tens of millions of dollars in our deals. But as an LP investor, what should they look at to evaluate a deal that's presented to them by a general partner?
very good question. And without going too deep, because there are a lot of things that you can evaluate on a deal. But a couple of things that I want to know is, what is their business strategy, right? How long is it going to take them to execute that business strategy? And how have they factored that into their underwriting model? I hate to say it, but like I have seen underwriting where people will put the entire renovation, all the value add in year one, and then try to discount it over time. And that's to me is a little concerning because it's really increasing your baseline in year one, probably artificially. Right. So how are they executing the business strategy? How are they modeling that business strategy? But also looking at their debt. What kind of debt are they taking on? Is it safer agency debt or is it riskier bridge debt? Right. We know a lot of people that have gotten a little bit in trouble with bridge debt because of the interest rate increases.
There's going to be a lot of trouble with bridge debt. I mean, it's coming. Yeah. So we're seeing. I had 2 other interviews today, and we discussed it. Yeah, it's coming.
Yeah, and then rent strategy. How are they modeling out their rents? Like, are they being super aggressive? Are they going to top of market? Are they growing their rents unnaturally over the first couple of years? As we discussed, I mean, we're cautious with our rent strategy, especially our growth. Right? How are they growing the rents? And then a couple of things are the non-controllable expenses. So we've seen this, Rod, in a couple of deals we looked
at. Oh, yeah.
Insurance. Yes. Right. Have they received a quote? Do they have it locked and loaded? Insurance is a massive expense and growing. And then also, what have they done for their taxes? Because taxes is another uncontrollable expense. So how have they modeled those? And have they actually talk to the assessor? Do they know for sure what's going to happen, or are they guessing? Because that's another, taxes are a really big expense. Yep. It's really important to get it done right.
Yeah. And we talk about, by the way, we dig into all this at my boot camps. I've got one coming up. If I didn't mention it early on in this podcast, coming up September 15th through the 17th in Orlando. It's going to be awesome. But listen, so they get this incredible spreadsheet. They're able to, analyze the deal. We use it in our own business. I mean, literally, that's not hyperbole. This is what we use. But the advanced version, talk about some of the features that they could buy if they want to. I don't want to go too deep on this, honestly. Yeah. But in fact, let me just stop me on any of this. It's got an automated underwriting summary report that comes with it. You can map in the T12. You can map in the rent roll.
Yep.
Yes. Okay. Yep. It's got a worksheet for other income included. There's a repair worksheet where you can really more organize your renovation strategy, and break it out a little better. Obviously, there's a rent comp worksheet that organizes the rent comps versus the subject property. That's really cool. I've seen that one. That is awesome. And of course, there's a tax worksheet to help you with taxes. There's a rent roll formatter. What is that?
Yeah, so this is one that I built. It's independent of the underwriting tool, but it's kind of complementary to it, right? So if you've looked at rent rolls, a lot of times they'll have multiple rows for one unit type and all the charge codes and all that stuff. It's very difficult to analyze those rent rolls. So what I did is I built a tool where you can paste in an Excel-based rent roll, and it goes through and it gets rid of all the extra rows. It moves all the amounts to their own column, so that you have like one row per unit and you can analyze.
Oh, nice. I didn't even know you did that. That's freaking awesome. Love it. Yeah. And so it formats them, for you to easily analyze them. And I know that with the advanced, the advanced is, what is it? $249 a year?
Yes.
Yeah. So $249 a year, you get 2 monthly members only webinars going through the program and deals and whatnot. And, so again, but to get started, you don't need it. Okay. It's something as you get into this deeper and deeper, if you want to be more analytical on these things, you can, but he's given away, what he's given away is extraordinary. So again, if you're just coming on, text, what is it? MFA. Sorry, I had a brain fart there. Text MFA for Multifamily Analyzer to 72345. We'll send you the link so you can download this thing for free. It's kick-ass. You're going to need it. You got to be able to review these deals. And if you can come to my boot camp to learn the rest of the business, then do that, because you're going to need to do that as well. Craig, I really appreciate you coming on and adding value and offering this incredible resource for free. And And, it's what my Warriors use. It's what we use on our acquisitions team. And it's just an incredible value add. And honestly, if you're listening, if you got any interest in this business at all, you are crazy not to go get this. So I appreciate you coming on, my friend, and we'll see you soon.
Great. Thanks a lot, Ron. I appreciate you having me.
You bet. Take care. So one other quick thing. We encounter so many people that are frankly frustrated. They're looking in the mirror and they're frustrated that they haven't been able to escape the rat race. They haven't been able to build cash flow to the point where they're able to have financial and time freedom with their families. And maybe they see other people buying real estate and creating, incredible cash flow, and they think, well, it's just scary. Buying apartments is intimidating. And I get it. See, that's why we created our Warrior Mentorship Program. They're our coaching students, and they've had extraordinary results. My students, I've been teaching about 5 years, and they own upwards of 140,000 units now that we know of, right? And we feel like it's just getting going. Now, we're looking to grow this group and really take it to the next level. And honestly believe that the greatest transfer of wealth could be upon us right now with this current economic environment. Everything's going on sale. So we're looking for people who want to follow a proven framework, really like a blueprint or a map, literally step by step. And then they're able to leverage our systems and our incredible network to raise money and equity, to find deals and close those deals and build partnerships, really nationwide. So if you're interested in finding out more about how you can become more in our incredible network and take advantage of the unbelievable opportunities that are upon us, you can apply to my Warrior Mentorship Program by texting the word CRUSH to 72345, or you can go to mentorwithrod.com. And what we'll do is we'll set up a call so you can check us out and we can check you out and see if it's a fit. Now, again, you can go to mentorwithrod.com or text the word CRUSH to 72345 to apply, and we will speak soon.